be pleased to tell you about Geof Smith. He's with our sponsor, Diversified Trading Institute, which was founded by Tom Busby back in 1996. And he developed the DTI method that's utilized to analyze or trade any market. Geof has been trading over 30 years, instrumental in developing the DTI method. And these Platinum Experience core level classes that DTI offers took first place in SFO magazine and Trader Planet Star Awards in the best trading courses category. And I think we have an office mate that wants to say hello to you, Geof.
Yes.
Hey, Geof.
And I think you ought to finish the song that you just played.
Geof, fun fact, used to be my work husband, and we worked across the hall from each other. Hey, buddy.
Hey, how are you?
Good. How are you?
So
Hi,
you in
Geof.
Mobile?
And he had some kids go to Bama, so that song Thunder, they play that at Bama when the team's coming out. So everybody knows Thunder. Well, roll tide, Geof. It's good to see you.
Good seeing you.
We are going to move right along so we do not start off late. So we're going to bow out. We'll be here to help you if you need anything at all.
Wonderful, wonderful. Well, good morning, everyone. Hope everybody's having a good day. Here in Mobile, we have lots of pollen from the oak trees, so I might seem a little stuffy, so just be aware of that. And we'll kind of go from there. I want to kind of step back a little bit and kind of look at the overall market, let you kind of know what I'm thinking about the overall markets, not only talking about bonds and the dollar, but the overall markets in general. I'm more of a commodity trader than I am equity and equity options and stuff like that, but I still trade equity and equity options. But I always kind of keep track of the commodities just because it's stuff that we use every day. You look at the wheat and corn and soybeans, crude oil, gasoline. Of course, we don't use gold and silver every day, but we might be wearing it, right? So, but I always like to look at those things just to kind of get a good feel for what the overall picture is. One thing I've been following a lot over the past 6 or 7 months is copper, and we'll get into that a little bit later, just because it's kind of the underlying indication if the global economies are starting to improve. One thing was kind of interesting this morning. We had the jobless claims come out, and they were actually the lowest since the pandemic came in. So, which tells me that we're starting to kind of pick up a little bit with all the vaccines and stuff like that going in, but the market's still not thoroughly convinced yet, as you saw with Hubert. We're still kind of selling off somewhat. So even though the market looks strong overall, it's still kind of weak. So we just popped up and made new all-time highs, yet we're still kind of weak, right? So that's one thing I want to kind of go through a little bit. And of course, a little bit about myself, if you don't know who I am. I had a nice introduction from Pat there, which is kind of neat. But I have been in the market since the mid 80s. My father went to the School of Hard Knocks, and he didn't want his two boys, me and my brother, to have to do the same thing. So he kind of took it upon himself to teach us about the market. He had a stockbroker. His name was Tom Busby. And he was vice president of Smith Barney in Oklahoma City, where I'm from. And he asked him to kind of help him out a little bit, and Tom agreed. So we got to learn how brokerages work and how to analyze stocks and futures and all this good stuff. We went to a lot of the trade shows around, and he sent us off to an investor boot camp in Provo, Utah, put on by a gentleman named Howard Ruff. We get to learn, meet a lot of gurus and learn about anything from penny stocks to futures to chart reading and all that stuff. When we got back from there, he sat us both down, wrote us each out a check for $10,000, put it in a stock account so we could make money with it or not, but he never gave us another dime. And he stuck to his word. I went off, got a couple of degrees in engineering, was a pipeline engineer for about 10 years. But through that time, I'd be getting up at 3 o'clock in the morning and trading the index futures with Tom and my brother over the phone, and then go to work all day and then come back in the evening, spend time with the family, and kind of do it all over again. Once the internet got kind of up and running in the mid 90s, started trading a lot more in the equity and equity options, along with the futures early morning. And then in 2000, Tom had started DTI in 1996. In 2000, he called me up and said, "Hey, come down here and help me out." And by that time, the market had become a hobby of mine. And I thought, what better thing to do than teach your hobby, right? So in 2000, I packed up my family out of the panhandle of Texas, moved here, been teaching and trading ever since. So I've traded in just about every market out there, not every vehicle by any means. There's some things I won't touch with the 99-foot pole just because I don't like it. It's kind of like carrots. I don't really care for carrots. So, but everybody has their likes and dislikes, right? So you just got to kind of find what you like in the market. So, but enough about me. There is risk in trading. Past performance not indicative of future results. If you can't afford the loss, don't take the trade. You're not going to win all the time. You're going to have losses along the way, and that's just part of the game. So just be aware of that. So let's kind of get into the market and things. Like I said earlier, the indexes are making new all-time highs, yet it still kind of looks a little bit weak. A real good pivot for the S&P is 3890. Above there, things look more positive. Below there, things just look more negative. They've been kind of hanging on that number, really between 3890, 3895. And when they get above that 3890 area, they have a tendency going up and hitting the 3915 and kind of struggling with it a little bit. So it's just almost like the market is, I don't want to see us topping out and rolling over, but it's just having a hard time going up. We've got some bounces going on just because things have moved so far so fast. You look at how copper's run over the past 4 or 5 months. You look at how the dollar's dumped off over the same time period, even bonds. The bonds were up around 170. They dropped down to about 152 on the 30-year. We were up around 140 on the 10-year. We went down to 130 on the 10-year, which brings interest rates up. And you've probably heard in the news that interest rates have been going higher and things like that. But it's not a bad thing for interest rates to go up. I mean, you think about it. We have around what was it, 1.7% on the 10-year and about 2.6% on the 30-year. That's still low, right? Yet it's up off of the lows that they were. So when I start looking at things in a bigger picture, are we getting back to quote unquote normal? And so if we have 1.6% on the 10-year, even 2% on the 10-year, even though it's a whole lot higher than where it was, it's still down quite a bit from where we were if you go back into the early 2000s or whatever it is. So we might be trying to get back to normal, which is fine. The dollar itself, they've been putting out all this stimulus money, which they print more dollars, which means there's more supply out there, which kind of puts downside pressure on the US dollar. And that's why it's been kind of pulling down. We got above par. What was that, 2019, which is 100 on the dollar index. And it's then started to kind of pull back a little bit, and it's gone down to right around 90-ish. Right now, it's bounced back up to about 92.5, which it probably needs to have a little relief rally. And the bonds have been doing the same thing. The bonds and the dollar have been kind of moving, hand in hand here. So bonds have had a nice little bounce over the past 3 or 4 trading days, and they will probably continue to do that over the next couple of weeks or so, but they're probably going to roll right back over and start kind of pulling back down again. And that's what I want to kind of look at. You've also seen the commodities kind of moving up. You've got corn, wheat, soybeans, and the soybeans are up above 1,400 or $14 a bushel. And so things have been getting pretty pricey. If you go to the grocery store, you've probably seen quote unquote inflation there. Things just look a little more expensive, and that's just because the commodities have been going up. And I think the reason the big push is on those is that people are worried about quote unquote inflation. There's no threat of it looking at the economic numbers yet. But when we start looking at things, I think people are kind of looking out into the future and starting to think, well, I got to start hedging myself going into the future because things are probably going to be more expensive. And you'll see that in those commodity markets. But we still have the COVID stuff globally. You've heard Europe and stuff like that, kind of shutting things back down, don't want this vaccine, they want a different vaccine, and so on and so forth. And it kind of spooks the markets a little bit. So you've also kind of seen a sector rotation coming out of the fast mover NASDAQ companies and going into probably the smaller caps and things of that sort. So that's really what you're kind of seeing right now. And the big question is do we come out stronger than what we came in as, or can we just get through this and start getting the economy rolling once again? So, and that's what I'm kind of looking at also. So my big picture strategy is looking to be long currencies, weak dollar, the currencies ought to be going higher. ETFs, it's a little easier to use those than to try to throw a dart and pick a stock. Dollar be moving down, hence long currencies, and the metals should be starting to move higher as well. They've done a pretty good job. They had a huge rally last year, especially in silver and copper. But now they're kind of topping out a little bit, and they're kind of correcting back some, which that's probably healthy, but they're holding up very, very well. One thing I saw this morning was copper actually got below $4, which has been holding above $4 for the past, I don't know, couple, 3 weeks. So that's kind of weakening up a little bit. So we'll kind of see what that does. So let's kind of go through some of the things I am looking at. This is the Australian dollar. This is the ETF on it. I know a lot of people don't trade futures, and that's fine. But if you want to do the Australian futures, that's cool. Also, they also have micros on them, so you can have a little bit less risk if you want to do it that way. But you can kind of see here, it's kind of pulled back with the dollar kind of bouncing back up. I took this picture, I think it was the day before yesterday, and chunked it in here. But the dollar's still kind of bouncing up a little bit. So this is kind of getting some downside pressure on it. But it's doing a really good job about holding above 75. So once we get the dollar, and one thing you can do, you can go to like investing.com and go to the economic calendar. They have this little box over here on the right side that has the index futures and actually has the dollar index on there. Okay, so if you just kind of watch that thing gets back below the 90.50 area on the dollar index, it'd probably be a good time to go out and start buying, like the Canadian dollar, the Australian dollar. And you can use the ETS if you want to do options. I'd probably do longer term options. I wouldn't do like next month or a couple months out. You might go 6-8 months out, or even do a leap or something like that, because I think the dollar is probably going to be moving a whole lot lower once everything gets rolling here. Even in the last stimulus, a lot of the monies aren't getting thrown out there immediately. It's going to be going over time, in fact, over a year or so before all that goes out. And they still haven't spent all the money from the last stimulus, so whatever. But as those come out, you'll probably see the dollar starting to weaken up a little bit. But I think the Australian dollar is a good one. The Canadian dollar, pretty good. The euro, and I think those will probably continue to move up a little bit. But again, before jumping in on this one, going to the conservative side, as Hubert was saying earlier, if you're wanting to have a little more risk, jump on it now. You'll have more risk in it. But until that dollar index gets below 90.50, I probably would kind of hold off before just jumping in. All right. So now bonds. We've been trending down. This is the TLT. This is based off a 20-year, but you can kind of see the nice big trend here down. And if you don't like shorting stuff, buying puts is a really good thing. Again, I would probably wait until the 30-year bond got back below the 54, 53 and a half area. That's on the futures contract. Again, you can go over to investing.com and find out where that is. Even you can go to, what is that? The other one, barchart.com has them also. But if you'll just watch to see if that thing gets back below that 54 and a half, 54-ish area, you can probably start buying longer term puts on TLT. And again, those things should continue to trend down. You're going to have support on the 30-year bond at 150 and at 147. Below 147, it'll probably test the 142 and a half to 143 area on the bond futures. That's kind of where we were a long time ago. If you pull up a really big long-term chart, you're going to see a gap in the chart. And that's only because back in 2002, that's a long time ago in my brain, they canceled the issuance of the 30-year bonds. Maybe it's 2001. Anyway, just because we were having a surplus, they didn't have to sell anymore. Well, they brought them back in like 2005. So you got like a 3-year, 4-year time period there that there were no 30-year bonds issued. Well, they had to readjust for that because the 30-year bond is actually controlling treasuries, the 30-year treasury bonds. So when they readjusted that, they kind of gapped things up a little bit because, well, there's time back then. And so you're going to see that gap in that chart, probably going to come back down into that area, right around the 147 to 150 area before it gets there. In fact, let me do this. I'll just show it to you since I have my screen here. Let's go to this real quick. US**.m. There we go. Have to go back in time. There it is right there. So right here is where they kind of gap things up because of that issuance issue that they had way back when. And of course, they've filled it here and they bounced back up and pulled back down and things like that. So, and of course, we've had this huge rally here and now we're starting to decline. So they got some pretty good support right around that 155 area. That's what I was just saying. Once we get back below that little area right there, then it can probably start pulling back down again. We're going to have some support right around this 147-ish area. And then probably down here in this 142, 143 areas, just have what they had a tendency of doing. But I think TLT probably is going to be a really, really, really good play. In fact, while I'm here, let's just do this real quickly, since I was mentioning it earlier. Here. We'll be talking about this on the slides, but there we go. The color bars that you see here is FCX. That's Freeport McMoran. All right. The gray bars here is actually the futures in copper. And you can kind of see that FCX and copper like to move together, right? So, and you can see copper's kind of, FCX kind of pulled down a little bit. Copper's down pretty good this morning. And so one thing that I always look to do when looking at copper, if you don't like trading copper futures, you can trade FCX, and it's a pretty cheap stock. It's like $30. So, I mean, 100 shares is $3,000, right? And if you have a margin account, it's 1,500. So it's a really good way to follow the copper. And you can kind of see here, give me a second. Annotate. I can draw something, right? Yeah, there we go. Okay. Right there. I'm going to circle this the best I can. Right there. That HGK21 is the futures contract on copper. Notice it opened up at 402 and right now it's at 397. So it's weakening up a little bit, and hence you'll see FCX coming down along with it. So how do I stop that now? Mouse. There we go. And I can click clear all drawings. There we go. I'm getting this down pretty good. So let's go back here. Alt tab. So back to here real quickly. So once we get back below that 154, I think I'll be looking to buy puts on TLT. And like I said, longer term stuff here. Gold has been correcting, and it's kind of the weaker of the metals, if you will. Copper and silver have been holding up very, very well. Gold's been kind of the weak one of the bunch. You actually seen platinum, palladium kind of moving up as well. But gold has been kind of the lackluster one here. It had a huge run. So it pulling back, I mean, it's still, $1,730. I mean, it's not too far from its all-time high. I mean, only a couple $100 from it, right? So, but it's just kind of been waning around a little bit. And I think once this consolidation is done, we really need to get back above the 1775 and 1800 would be even better. Once that occurs, you're going to have big resistance around the 1830 to 1845 area on gold. And then it can start taking off again. And I'd like to see silver get back above $28 in that same little instance there, and even have copper get back above 420. That happens, they're all going to take off and run. And if you're wanting to be more aggressive, this is probably a good buying opportunity down toward these lows on gold to probably be kind of scooping up, GLD shares, or if you're wanting to do really long-term leaps on GLD or whatever it is, it's a little riskier. But overall, I think it's still going to be starting to move higher. But I would like to see us get back at least above the 1775, not 1800, before kind of starting to jump in and taking the trip higher. But I think gold and silver are probably, gold's probably going to be making new all-time highs probably in the next year or so. Silver, I doubt it will, because it has a high up there at 48, what was it, 48.84 or whatever it was, way back when, not quite $50. So I don't know if it will do that or not, but at least it'll probably get up above, 35 to 37 or something like that during that same time period on silver. So, but I think gold overall is probably going to, all the metals are probably going to be moving higher, just because we're going to have a weakening dollar and people hedge that with, the metals. So there it is. Now, and here's what I was just talking about in my software. Freeport-McMoRan, probably the easiest way of taking the copper ride. Copper is in huge demand right now, especially in Texas. They just got froze over there, if you recall that. And you've got a lot of manufacturing plants and stuff like that struggling to get things rolling. You even look at, you probably heard of the price of lumber is making new all-time highs. And what's really interesting about that is that here in especially in the southeast region, people actually grow trees. They'll start growing trees right when they get married and stuff like that. And the trees will be all nice and big when the kids go to college. They get them all cut down, sell the lumber, and then send the kids to college. There it is. So problem is they're having a hard time selling their lumber, just because there's so much available. So the mills go out there and say, well, I'll pay you this for it. They can actually, get the price that's a lot cheaper. Of course, when the mills are done, they actually ask for a whole lot higher price, because, well, that's what mills do. And the mills are running pretty much at capacity now. They're even starting to build new ones, but there's probably around a 2 to 3 month lead time on them, just because of the demand for lumber, and they were shut down for so long. So you've seen lumber prices just skyrocketing, and there it is. When that will stop, who knows? Usually higher prices usually correct themselves, because they're higher prices, nobody buys it, and then they start reducing the prices and people start buying them up again. So the cure for higher prices is higher prices, if you want to look at it that way. But you've got a huge demand on copper as well, just because a lot of pipes busted. And so you're going to have steel mills and stuff like that. They're going to have a huge demand on them. So you'll probably see, Freeport-McMoRan and US Steel and various others, maybe even Alcoa, probably starting to perform pretty well. And I think overall they will. And another thing that's really cool about this is they're talking about an infrastructure package, right? And I'll get into that here a little bit. The infrastructure package, if it's done correctly to build roads and bridges and all that kind of good stuff, will put a big demand on all of that as well. So it'll be another push, if you will, if they start getting that infrastructure stuff going. So, and me talking about it, I want to talk about these two. So Terex, I don't know if you probably have the Terex Titan, the humongoid truck that's bigger than your house, right? And you stand next to the wheel and you don't even come up to the hub or anything like that. They're huge trucks. They're actually, they make very, very large things, but they do a lot of infrastructure stuff. And you can see here, they've had a nice little push up. They're correcting back with the overall market a little bit, but Terex is doing pretty well. And I think this would be a very, very good one to play as far as the infrastructure goes. So if they actually come in and say, hey, we're going to pass this, and they do the little pin work and everything like that, and it gets passed, this is probably one. Caterpillar is probably going to be another one that's going to be doing pretty well based off of that. There's actually some concrete people out there that'll be doing pretty good as well. But I think this one, price wise, is pretty reasonable. It's around $45. It's not real expensive, and it has options on it, so you can go a long ways out and kind of look at that. The media people have actually been doing pretty well as well. Here's a daily chart on Viacom, right? And if you go out and look at a lot of the media companies, and I think people kind of not really been seeing this, they've actually been doing pretty well. And I think they will continue to do pretty well over the next 3 or 4 months. Now, I don't know if it'll get past that, but this is kind of a more current, if you will, as opposed to really long term. But the media companies have been doing quite well. And I threw this in here just because I thought this is kind of an interesting little area. And the only reason why I've been seeing that is I got some scanners in my software, that actually go out and start looking at, various stocks in the S&P 500, 400, 100, NASDAQ 100, and the Russell 2000. And the media people have been popping up. Fox has been in there. Viacom's been in there. A lot of them have been in there. And I was just like, well, that's kind of interesting. And so I've been kind of trading them a little bit. But this is kind of an area that I think people can kind of look at over the next 3 or 4 months. Don't know how long it's going to last. I'm not real big on the media thing. So there's no futures on it or anything like that. So I just don't follow it all that well. However, in this area, the aerospace is changing a lot. Trump actually created the Space Force. If you don't know what that is, basically it's kind of it's its own division of the military, but it's kind of under the Air Force, if you will. And they're the ones going to be starting to manage all the satellites and all the stuff that's up in space, if you will, just because that's where everything's kind of moving to. Another area that's going to be really interesting to watch also, as far as aerospace and defense, is space flight. And there's some really neat companies out there. I mean, you've heard of, Elon Musk wanting to put people in space. And there's a lot of them out there that are wanting to put people in space. And instead of kind of jumping on them because they're individual companies and are they making money or losing money or whatever it is, this is an ETF, ITA, that kind of follows along with that. And I think longer term, the aerospace defense is going to be doing a lot. And if you look at kind of like Boeing, right? Boeing has a defense arm and it has a airplane arm. Well, their airplanes have been having a little bit of trouble. I'm sure you've heard of that. And so their stocks get kind of beat up a little bit. But you've got a lot of other ones out there that do pretty well in that. But I think this is a really, really, really neat way of kind of taking advantage of how the space is going to be working. And if we can actually get people in space and kind of go from there, it'd be kind of neat to take a ride in a quote unquote airplane up in space, just kind of see the stars and moon, stuff like that. So I'm sure the tickets aren't cheap, probably a couple $100,000, right? But it probably will be a real neat thing if they start doing that. But I think this is a really, really neat way of kind of looking at things. I'm going to minimize this thing here real quick. There we go. As you see here, kind of going through what I kind of look at a little bit, and I kind of want to show you this. Let's go over here real quickly. I'm going to spread this out somewhat. You'll see these things moving around a little bit. And in fact, I probably ought to start here. Let's do this first. Kind of big. Well, here. Let's kind of shrink this little box up a little bit. There we go. Okay. And I just chunked some stocks in here. But what this is we call these two little charts right here with these red bars on them. That's what we call the horse race. What this is a percent change from open. All right. So wherever they open up today is where we're going. Now you'll notice there's an R, a D, and a W underneath these bars. R is for reference bar. And I'll show you that real quickly. I'm going to change this over to a 30-minute chart, make it easier. And here's NVIDIA. Probably got a bad tick in there somewhere. It was. So this is NVIDIA. You'll notice these blue bars here. There's a blue bar here. There's a itty bitty little blue bar right there. There's a blue bar here. There's a blue bar here. We mark the first 30 minutes of the day market, and I'm in Central Time, so I'm going to say 8:30 to 9, as a reference bar. So wherever we start moving off of that is probably the direction to start going for the morning anyway. And we also have one at 12:30 p.m. Central Time in the afternoon. Now, some stocks will trade post-market. And that's what the little bitty bar is right there, because that's 5 p.m. Central Time. Well, that's when the index futures open up for the next day's trade. So at 5 p.m. Central Time, it's tomorrow over in Asia, and they start trading and stuff like that. Japan opens up at 7 p.m. Hong Kong opens up at 8:30 p.m. So that's tomorrow's trading. We get to kind of see how the index futures are going throughout that time period. Well, some stock will trade up until 7 p.m. That's what NVIDIA does here. And it'll close out and stuff like that. So it'll actually post a bar there. I wouldn't be trading NVIDIA at that time of day, but anyway, there it is. So that's what the R is standing for. I'll minimize this back up right there. D is for the actual day itself, and then W is for the week. Now you can add months and quarters and years and whatever you want to on this saying. You can put your own time in there. I would just kind of keep it inside of the week myself. Now, and then it tells you who's moving the most. You can see Roku's the weakest. See how big the red bars are, right? And over here on the Russell for the week, the Russell is definitely the weakest for the week. So if you're trying to figure out who's strong and weak, this is a real quick way of doing it. Now, if we go back over to here, and this is what I wanted to show you, I throw there's a bunch of stocks in here and stuff like that. And if you want to look at this, I have all the commodities and futures over here. So it's basically the exact same thing. So, but what this is doing is if it's green, you'll notice here, I'm going to shrink this up a little bit. This is what we call a compass chart. This is a buy zone here. This is the sell zone down here. So everything that's green here, you see buy zone, sell zone right there. Everything that's green is inside of the buy zone. Anything that's red is inside the sell zone. Anything that's white is between the zones. All right. And not only that, you see them jumping around because it's ranking them by that horse race that I was just showing you. So instead of me going out there and trying to figure out who's the strongest and who's the weakest and pulling up a billion charts and everything like that, all I got to do is come to this page and the stocks that I have in here. And you'll notice Neo, Plug, Blink, these are all kind of the electronic things out there. They make batteries. Neo is actually a Tesla over in China. So for some reason, they're strong today. This Blink here is actually the plugs that you can charge up your car on and stuff like that. And of course, Williams-Sonoma has been smoking along anyway, just because their earnings were so good. And that KSS is Kohl's. So retail is doing pretty well, it looks like to me also. So I can actually come in here and say who's going up and who's going down. And if I scroll down to the bottom, zing, there's all the weak ones. All right. Microsoft is down there, McDonald's, CVS, Netflix, Newmont, because gold's down, Tractor Supply, so on and so forth. So you got the weak ones down here, you got the strong ones up here. So if you're thinking the market is moving higher, there's your strong ones. Think the market is moving lower, you know where the weak ones are at the bottom. So I can go to this page very quickly. Same thing with the commodities. I can come over here to see who's moving up or who's moving down. You'll notice just looking at this very quickly, the grains are lower. There's wheat and soybeans. Here's corn. Here's bean oil. And up here at the top, you've got natural gas, silver, feeder cattle, live cattle. Those are your strong ones right there. So if I'm trying to figure out what to trade today as far as commodities, exactly the same thing. I don't have to go out there and start looking at who's where and who's what and all that good stuff. I can actually come in here and find that very quickly. And I have lots of different ones that I actually do this with. I actually have one that have like really small, cheap stocks that have high dividends. And I make all kinds of these, what we call a dashboard on those things. And I try to rank them out. So I take a lot of the guesswork out of it just by coming to this page and saying, okay, who's strong, who's weak. So this helps me make my decisions a lot throughout the day. Another thing that I like looking at is a scan, and this is for equities and futures. We'll just pull it up here really quickly. And I'll just let it do its little thing here real quick. And this scan is really a kind of a cool scan. Let me show it what I'm doing here real quickly. Go over to the settings so you can see it. Let's get the little pencil back out. Where's my little pencil? Draw. There we go. Nope, I didn't click it. Draw. Oh, there we go. All righty. So here, right there, says optionable. I don't like to trade stocks unless they have options on them. because if I buy the stock, I want to sell covered calls, or might want to sell puts to enter the stock or whatever it is. So I want to make sure it's all optionable. It pulls that from the CBOE's website. All right. So that's pretty simple. If you want to look at, above the 50-day and the 200-day moving average, I always keep the 200 checked, longer term average there. And then we get to this percent right there and number of years right there. This is where this is kind of cool. What it's doing every night, and I run it at 2 o'clock in the morning, the actual report itself, it goes out and takes all those stocks that I listed earlier, the S&P 500, 400, 100, NASDAQ 100, so on and so forth, right? And it goes through those stocks and says, if I were to buy them on the 25th of March and held it for 10 days, 20 days, or 30 days, could I have made money? Or could I have shorted it and made money? And that's what it's doing. It goes back 10 years and says, could I have done this? And is it consistent? So what this is saying is that it did work 87% of the time. That means it lost once because, and I put the number of years at 8 and not 10 because the 25th of March this year is on a Thursday. What day is it going to be on next year? A Friday. And the next year is going to be on a Saturday, right? So it's not going to be 10 out of 10 years because we're going to have holidays and weekends and stuff like that. So I want to make sure it works at least 8 out of the 10 years. And if it missed once, okay, whatever. But it's still pretty accurate. 87% of the time, 8 out of 10 years. Now you can change this to 100% of the time. That's fine. You'll just get fewer stocks and it will work that way. But I like to see more stocks just to see what they're doing. You can give it a date range, which I did. That was this week. All right. And then I put in a minimum price here and a maximum price. I put 700 max, 30 minimum. Now, if you want to look at just cheap stocks, just put a maximum price at $30 and anything under $30 it'll grab, right? So now down through here, the center, you can say, I want to make sure the last price is above the year open or below the year open or whatever you want to there. And you can do that. Sometimes I'll do that. Sometimes I won't. I don't really start clicking on that until I get past really the first quarter of the year, which we're almost there, right? So then I'll say, okay, the indexes are all above the year opens, which the NASDAQ is not. So I don't like checking that box right now just because we got one index that's below its year open. And then once you do that, you can click update if you've changed anything, which I didn't change anything. I'm going to trash this out. Clear and go back to a mouse and go back over to here. So here's all the stocks that it found for this week. And you'll see 322 up to 326 because that's the week that I chose. And inside of this, again, doing the same thing, click on the longs here. This is the top 10 longs for this week. And here are the top, actually, I think it's 20. Here's the top shorts for the week. So I can very quickly come in here and say, if the market's moving up this week, these are the stocks I want to trade. And if this is down for the week, these are the stocks I want to trade. So I can buy puts on these, or I can buy calls on these, or sell call spreads on the other ones, or sell put spreads, or whatever it may be. So I can come in here very quickly and find out which are the strongest stocks historically, seasonally, if you will, that I should be trying to buy. You'll notice earlier we were noticing natural gas was at the top of that dashboard. Well, look at this OKE here. OKE is One Oak. That's a natural gas company. So they agreed. Pretty cool, huh? So you can either go out and try to, trade natural gas futures, which are pretty expensive, or you can just go over here and grab One Oak and see how it does. So, but that's exactly what I'm doing every day, is going in and trying to figure out what stocks are strong, what stocks are weak, and what direction we trade in the index futures. And I'll let the software say, these are the strong ones, these are the weak ones. And I can start going from there and get quicker decisions made, as opposed to me having to do a whole lot of work every single day. So anyway, back to the PowerPoint. Now, I've been talking a lot about options. There it is. Ding. And I've actually created an ebook, I guess is a way of putting it. It's a really long white paper, or it's an ebook. It's just an ultimate guide to trading options. This doesn't get into all the Greeks and stuff like that. It's just kind of a simple way of just learning the option market. If you've never got into options or struggle with them or whatever it may be, This is a real simple way of just getting into it. It goes through a method of trading options. It actually gives you several different trading techniques and some trades that we look for throughout the day and the week. It's a really cool little book. But it has a complete guide to weekly options if you like doing weekly options, or if you want to do a longer term options. If you like trading stock using options, it goes through that as well, like selling a put, buy the stock, flip around, sell covered calls against it, so on and so forth. If you're like the fast action, like you saw Hubert doing, just right after the open and everything like that, there's actually a trade in there that will do that using the equity and equity options market. So it's really pretty cool. I also put the biggest mistakes traders make in here because we do make mistakes, and we're, get the idiot stick and hit us on the head a couple of times. We make wrong clicks. I meant to buy puts and I ended up buying calls, right? Because you clicked on the wrong side of the option chain. But there's a lot of things that we do that we don't mean to. If I would have done it the other way, I would have made a whole lot more money, right? So, of course, we go through what we call the horse race trade, and we just saw how the horse race was working. And there's actually a trade based off of that horse race that we were seeing. So, but there are some other income strategies with the options that are in there. And if you want it, it's $7. If you'll just go to dtitrader.com/ultimate or call 904-416-1776, you'll be good to go. So anyway, Raleigh.
Hey, Geof. How you doing, brother?
Good. How you been?
I'm doing just fantastic here.
Is that a short sleeve shirt?
This is a short sleeve shirt.
It's not freezing there anymore, huh?
No, it's not. It's not. But I did get woken up about 3 o'clock in the morning with one hell of a thunderstorm and hail.
Oh my goodness.
But it moved quickly through.
Well, good, good.
Shredded the trees a little bit. Anyway, it's been a wild late winter, early spring. But anyway, Geof, thank you for everything there. And there were several questions that came up, and I'm going to try to group some of these together. One of the things that become very, very apparent is how expansive your platform is. Is it fair to say that you can virtually trade anything from that platform? Stocks, options, futures?
Yes. That's what it's designed for. We initially did it around the futures markets because they're a 24-hour market. Right. But just because the majority of the people out there in the world look at equity and equity options, we've expanded it out to that. We did that probably in 2008. Jeanette was here at that time, but it was right around there. And now you can trade just about anything you want to through it. If you want to do Forex, you can do that as well.
Wow, that's fantastic. And so from that perspective, somebody that gets the platform, you provide the data feeds. Can I also trade from the platform? Do you offer brokerage?
No. It's just for information only.
Just for information only. Okay.
Information only. You have to have your own platform if you want to use Think or Swim, or if you want to use what was that Trade Station or anything like that.
Sure.
Sure. It connects to various brokers. It connects to Interactive Brokers, or well, it used to be Options Express, but if your Options Express account got moved to Schwab because Schwab buying everybody now, right. You can still use that data. It does connect to Trade Station. Their API is kind of clunky. But it does various other data feeds as well.
Okay, great. So it's everything that you need is right there. Everything that you showed us, those are programmable things that you can do.
Yes, absolutely.
And to that point, there was a question that says, Geof, so on average, how much time do you spend pre-trade every day when you're analyzing the markets and you're getting ready to make some decisions about either placing new trades or modifying positions?
Well, yeah. That's kind of a hard one to answer. I've seen the market from the past several weeks, months. I'm here every day looking at the market. All right. So in my brain, it has recorded where things have been and what they're doing. So there's a lot of just because I watch it all the time, there's a lot of things I don't have to go and look at. But every morning when I come in, I probably spend a good 15 to 30 minutes at best, kind of going through everything. Now, this machine back here, which you'll notice has black screens because it got a Windows update last night and died on me. So I'm really irritated about that. That's another point. But this machine back here is where I usually keep all the commodities. And on this machine that I'm projecting on, I do all the equities on it. So I can flip around very quickly and see what the commodities are doing. And on this one, I see what the equities are doing. So I actually use 2 computers to do that, which I have a total of 7 screens to do that with. But I'll usually spend probably 15 to 30 minutes kind of going through everything. I like to look at a big picture first, to look at weekly charts, and then I bring it down to a daily chart. And then I can look at an intraday chart and go, okay, they're all trending the same. This one, I got to be buying it if I'm going to be doing something. And I can go from there. And I like to see them hit those buy zones and sell zones to confirm. Now you can cheat a little bit. You can be a little more risky and say, if it's above the open at 8:30, boom, I'm buying it. But I always like to see them hit those buy zones and sell zones to confirm that.
Okay. Wow. Fantastic. And that's an awful lot because, you had mentioned all the different instruments that you potentially trade, and within 15 to 20 or 30 minutes, you're assessing all that as it relates to what you want to do. Yeah. Other thing that was kind of interesting is it seems to me that you have a cool little blend between fundamental analysis and technical analysis. You're primary technical, but the fundamentals for you just sort of give you just a bias, right?
Well, it gives me a good fuzzy feeling. Let's put it that way. I don't really like go into equities, looking at their sales and their all that good stuff. I don't like that. I always look at the what they sell, and is it popular? Is it a good thing? Is it going to be growing? So on and so forth. I like that kind of fundamental analysis. And of course, there are some doofuses out there as far as CEOs that they mess up and they don't get it right. And of course, that company is going to be getting hurt. And that's why I kind of like looking at, they have a ton of ETFs nowadays. Sure. ETFs are a lot better because they look at that sector, and if the overall sector is moving well, the ETF will do well, as opposed to trying to pick that one stock and messing up on it.
Yeah, absolutely. Well, fantastic. Well, we're coming to the end of the session right here. Do we have, let me see here. Bernie asked a question. He says, do you avoid any futures markets because of poor liquidity?
No, I don't. If something's going to go up, it'll go up. If something's going to go down, it'll go down. It doesn't matter if there's not much liquidity or if there's a lot of liquidity. Most futures markets, are quite liquid. You're going to find some like Bitcoin that is not. Right. And a lot of times you'll see that margin will keep you from trading it also. The margin on a Bitcoin futures contract is $56,000. Now, that's for one contract. So you're going to have a deep pocket to trade those futures contracts. Mm-hmm. You go over to like live cattle and it's $1,800. Huge difference. And you're controlling 40,000 pounds of live cattle. Mm-hmm. So margin will keep you out probably more than just the liquidity. But a lot of times, one thing that people don't realize, and I don't know why, now I'm going to get off on a tangent here just a little bit. If you look at the NASDAQ, everybody quotes out there in the world the NASDAQ composite. The NASDAQ composite did this, NASDAQ composite did this. The QQQ is based off the NASDAQ 100 index. The NASDAQ futures is based off the NASDAQ 100 index. All right. So everybody trades the NASDAQ 100, but everybody quotes the NASDAQ composite. There are NASDAQ composite futures. The volume in the NASDAQ composite futures is usually 0 every day. Yet you'll be trading 150, 200,000 contracts to the NASDAQ 100. So I don't know why they quote the NASDAQ composite. When was the last time you heard the New York composite quoted? Right?
That's a good point.
That's apples and apples, but they don't do that. And that's really weird to me.
That's because you're an engineer.
That's probably true.
Hey, listen, one last question. Any thoughts about trading micro futures? Absolutely.
I actually trade them some because sometimes I get this gut feeling that it's going to do something. So I'll go over to the micros. You have micros in the currency futures. You have micros in the index futures. You have, I'll call them minis in the grains. Okay. The grains are 1/5 the actual contract, but the micros are 1/10 on the other ones. So on the S&P, which is $50 per point, it's $5 per point on the micro, which is really cool because if you're just starting to learn trading futures, you don't have a whole lot of risk. And if you look at the current market where there is a lot of swings in it, you can actually risk more on your trade. Now, granted, you don't get paid as much, but you can still make money on them. So I like them a lot. The one thing you really have to be aware of on them, though, is commissions, because I can trade for the mini S&P. It's a $3.50 round turn. All right.
Mhm.
Well, on the micros, they charge me like, was it 95 cents on a micro? Well, at one point, I mean, if you do 95 cents times 10, because it's 1/10, right? That's $9.50, right? Well, there's a point there where the commission is going to be more than doing the actual mini contract. So beware of that.
I got you. And I think I'd like to ask just another question associated with that. Would you recommend, for example, that somebody that's just looking at trading futures for the first time, has gotten comfortable with the strategies, built a plan, and is getting ready to risk real capital, is a micro a good place to start?
And in fact, in the S&P, the NASDAQ, especially the grains, and the currencies, they're very, very liquid too. And it's a good way to, I mean, I have a firm belief that majority of the people out there that are even learning to trade or trade have very good analysis. The problem is the little finger that you click with, you get anxious and you jump in too early, and that wasn't your plan, or you get out too early because I made a little bit of money, but I should have stayed in a lot longer. And so the psychological point of it really kind of messes people up, but their analysis is usually dead on.
Right.
So if they would just trade their analysis, they would do real well. But a lot of times they don't, just because they're nervous and they're anxious and they're worried and they don't want to lose and blah, blah, blah.
Sure. I've always kind of felt like, if I'm really going to start getting serious about playing poker, maybe the first matches I should take are penny poker matches,
Yeah,
before I start
exactly.
working up,
Yeah, absolutely.
big time,
Absolutely.
because, that's the way you learn. Jeff, once again, thank you so much for your time today.
You bet. You
It's
bet.
great to see you. I know you're a
seeing
busy
you.
guy. You got a lot going on, and thanks for leading things off to us. Fantastic, my man.
Yeah. So, well, I hate to ruin everybody's screen with my ugly face, but there's a pretty one right there.
There. Oh, you're talking about her. Okay.
I'm talking
I
about
got you.
Jeanette.
Thanks, Jeffy. I miss you. I'll come see you.
All righty.
Wow. Well, what a great presentation from Geof Smith at Diversified Trading Institute, otherwise known as DTI. And just want to go back over that special offer that he has, Becoming a Profitable Options Trader. This ebook that he's put together, it's a guide for producing income with options. It allows you to learn more about the 1 hour horse trade, a racehorse trade that they do, and everything that you need to know really to become a profitable options trader. So let's call it an entry-level book for people that are interested for that. Go to westmarktrading.com/Smith. I think he said it was $7, and it's just well worth having it in your library. In particular, if you're starting to look hard or thinking about getting into options trading. And so with that, Jeanette, we are running on time here, but let me go ahead.